Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Nikola, ticker symbol NKLA. So I wanted to do a follow-up on this one from last Sunday when I went over it. But to start, I wanted to take a bigger picture view. Specifically, I wanted to look at the low, the all-time low that was hit on June 6th of 2023, being a price of 52.1 cents. So I just want to keep that in mind. Also note that I do have it highlighted here as this blue line. So we will be looking at that a little closer on the chart in just a second. But yeah, I just wanted to take a step back and look at the chart to give us some perspective on where we are currently at, closing last week, January 19th, at a price of 65.21 cents, being up slightly higher, about a little over 1% in the after hours, but we'll have to see where it starts trading in the pre-market tomorrow, Monday, January 22nd. But yeah, so now let's zoom in on the chart so we can take a look at some of these levels. Some of them I went over in the last video, which, as I had mentioned, I put out on last Sunday. So that would be following the trading day of January 12th, which was last Friday, or 2 Fridays ago, I should say. And so during that video, I had suggested that this dashed line could act as support. However, I suspected that price would be going down to test the bottom of this wedge right around the price of 58.4 cents, marked by this red line. And that is almost exactly what happened last week. Pretty crazy. We hit a low on Thursday, January 18th, of 58.25 cents. So just piercing that red line, not really going much lower than it, and closing on that day above that level at 62.18 cents. And it does look like right around that level, about 62 cents, has been basically the lowest close that we've seen was on that day, Thursday, so 62.18 cents. So hopefully we don't get any closes below that, and hopefully this is a sign that we have hit bottom. And if we do look at the weekly chart, it doesn't look too great. We've just had so many red weeks in a row. However, with last week's dip to 58.25 being the low, and then going up, that does suggest there could be a reversal, that this is a bullish hammer candle, that we might be seeing a turnaround this week. So I do think that is a pretty good sign. Hopefully, we break that trend of red weekly candles and we can close this week green. And having touched the bottom of this wedge, I do think that is possible. I do think that we could be retesting 70 cents by the end of this week. So there is a lot of hope there. I'm pretty excited about that. However, I do think it is good to prepare for further downside in case that happens. And so, as I had mentioned before, 52.10, that being the previous all-time low, it is quite possible that we do break below the bottom of this wedge, maybe get a tail or wick down to 52.10 or perhaps lower, creating a new all-time low. So good to prepare for that. But like I said, I do think the weekly candles suggest we could be seeing a reversal and a retest of this orange line, or this white dashed line, right around 70 cents, or perhaps 69 cents. Let's have some fun with it. Why not? But I do also think it is good to prepare for even further downside, just in case, worst case scenario, so we are prepared for it if it does happen. And so in order to do that, I did a Fibonacci retracement from the low of December 11th to the high of December 20th. So that's where we get this diagonal line here. And so I just did a retracement, really just an extension down to the 1618 level, which would be at a price of 45.38 cents. So, I don't necessarily think price is going down that low. I do think, of course, 52.10 has to be crossed off the list before we get down there. But just to keep it in mind, just, prepare for the worst. I do think it's good to prepare for the worst, but I do think it is more likely that we see a test of the top of the wedge before we see continuation down. But it's quite possible that we do get rejected from 70 cents and then retest the red line at 58.40 and the bottom of the wedge again. So, just keep those levels in mind. 52.10, I do think that is kind of a level that might be tested again. I do think worst case scenario is 45.38, given that Fibonacci retracement. But I do think that 70 cents is on the table for this week. And, I'm excited about that. And I hope you guys are too. And those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.